Welcome to the Introduction to the Footprint, which is a course under the Core Execution module for Pivot Boss Masters. Let's go ahead and get started. The footprint is by far the most important component that I've used in my trading in terms of identifying the most precise reversal opportunities, breakout opportunities in the market. It is a way that allows you to see the order flow and the auction unlike ever before. It's a technology that's been out for some time, and Market Delta did pioneer this technology perhaps 10 years ago, but it really hadn't caught on until much more recently in the last year or two, where really good traders are starting to see amazing value because they're able to see things with the footprint chart that you weren't traditionally able to see unless you were tape reading and watching the dome and seeing these cues yourself. It was very difficult to see this order flow the way it was before, but with the advancement of technology and the footprint chart, you're now able to see this real-time auction take place in the market, and that's what helps you identify the best opportunities in the market. So if you're looking at the chart here, basically what we're going to do is we're going to look at this day that occurred from here to here, and we're going to look at this action right there, and we're going to show the various key levels, what happened at various inflection points along the way, and how that was able to identify these moves along the way using the footprint chart, because the footprint told you everything you needed to know about this day in the trading. And of course, if you're able to identify certain key elements from the footprint chart, like aggressive buyers, aggressive sellers, and where the passive buyers and sellers are placing resting bids and offers, and if you're able to identify the stuck buyers or sellers that are entering the market and becoming trapped, those are the key reversal points that affect price movement. Remember, order flow is why price moves. Order flow is the reason price moves. It is the reason every single time. Sometimes technical analysis may move stocks or futures prices. Sometimes it's fundamental analysis. But every time it's order flow. So what we're going to do is we're going to identify these key levels here using order flow. But first, let's look at the actual footprint chart, and let's look at the key elements of the chart so that you know what we're looking at. Okay, so this is the footprint chart that I've created. The footprint chart can look many different ways. When I first started using the footprint chart, it looked like this. Okay, well, you can't really see the letters, so let's change the text color. This is what it looked like when I first started using the footprint chart. Okay, very, very important numbers here. And you can see that not much information is kind of jumps off the chart at you this way unless you're trained to see certain things. But basically what's happening here is these are orders that are being transacted at the market. So 133 right there. That is 133 contracts that went through at the market for crude oil at 104.18. Basically, these are aggressive buyers. Those are buyers that are lifting the offer. So basically, they're placing a buy market right now. Buy at the market right now because I can't wait to get into this price. So that's what that number is. On the left side, this is the offers. Okay, so for example, right here there were 46 contracts that came through on the offer, and basically those are aggressive sellers that are hitting the bid, trying to get price to go down. Okay, so that's all this is. So when you're looking at this and you're seeing price and you see the bid and ask right here, you can see 159. That's a sell side imbalance right now, and you can see the volume that just came in right here. 63% of the contracts that came in on this price, which is 104.25, was sell side. 64.5% of the contracts that came in, 167 contracts came in to sell. They hit the bid, and price did what? Did price go up or down? Price ticked higher. That's a stuck aggressive seller. That's a stuck aggressive seller. So basically, someone came in, they sold heavy. You can see the volume spike that came in, and then price went bid. Anytime an aggressive seller comes in the market and price goes bid after filling that order, that's a stuck seller. And what do they have to do? They have to cover to get out of their trade. So this stuck seller is what influences price to go higher as they liquidate or cover their position. So basically what we're looking at here is we have bid offer, bid offer, bid offer, right? Bid offer, bid offer, bid offer. Okay? So when you're comparing this, you can see bid offer right here. These are the real-time bid and offer at the current, the best bid and the best offer. Okay? So when you're looking at these, you're kind of going in this fashion, right? You're saying, what's the bid offer? Bid offer, bid offer. 46 bid, 36 offered, right? Right there. Okay, that's what you're looking at when you're looking at this. Now, when these numbers come through, this is someone that transacted by hitting the bid, trying to get price to go down. That means they sold at the market. Right here, this is a buyer that comes in and basically lifts the offer, which means they buy on the market on the best offer because they want price to go up. Okay, so that's basically what's going on here. Now, what I've done is I've simplified all this because I don't really care so much about individual numbers as I do about the differential of contracts at a price. You know, how many contracts came in on the bid versus the ask? Give me the difference there and then tell me what that is. So that's what, I come in here. Rather, I come right here and I go from volume and balance. Let's do the delta, bid and ask volume, okay? So over here, let's bring it back to how we had it. There it is. And now this is the view that we'll be using for our study and for our trading. This is the delta. So now instead of having a number to confuse you or to bog you down right out of the gate, what I'm doing is providing one number at every single price level. And it's saying what was the differential, the delta, between the number of contracts that came in on the bid versus the offer. What's the difference? In this case, there was 120 contract buy delta, buy side delta. So 120 more contracts came in to buy on the market or at the market than sell. That left a 120 contract buy imbalance. Okay, right here, these are sell. It's a sell imbalance, 167 contract sell imbalance. And at this price level, what you see over here is this is a volume profile. Okay, this is a volume profile. And what this shows is the delta at each price, the cumulative delta at each price for the entire session. So this is a volume profile of just the contracts that have come in at the market, on the bid and on the offer. So this has nothing to do with limit orders and all of that. This is just what came through at the market, what has filled, what has transacted. That's order flow, right? What is transacted right now, and what's up in terms of limit orders that are resting above and below current price, right? So in this case, what we're looking at is 131 contract sell imbalance at this complete price level. And that means that 64.5% of the contracts that came in at 104.25 were sell side. So when you're looking at this, you say, okay, that's a big outlier right here. That's a lot of volume compared to prices around it. It's also a lot of sellers came in, or a big order to sell came in, and price ticked above it and is currently holding above that level. What does that tell you? It tells you someone came in short here and they're underwater. So basically, this is a visual representation. It just sticks out like a sore thumb right there. this is a visual representation of someone's sell position. That's a bear. That's a bear that came in right there, and right now they're underwater. And if they continue to stay underwater and price never breaks back below their entry, what do you think they're going to do? They're going to have to cover that trade. How do you cover? By buying. You have to buy to cover if you're a seller, right? So when you come into the market and you sell it here, after you sell, you become a buyer. And if price never comes back in your direction, eventually you have to cover that trade. And when you cover, you are the buyer that lifts the market. So it's very important to identify this point right here. The other thing is, we also have delta differentials at the bottom of the chart here. So this is a delta that shows you the delta at a price all day. And this is the delta that shows you what happened at the price on that bar. This is a 6-tick range bar. And this is the delta that shows you the differential of contracts at this entire 6-tick range bar. So there's 3 different ways to see delta in this one chart. You can see it at the specific price, right here. You can see at that price for the entire day. And you can see at that price for that entire range bar. What that tells you is, for example, look at this 131 contract that came in. That's a big buyer. 131 contract buy imbalance in crude oil. Okay? $10 per tick, $1,000 per point, 131 contracts. It's a pretty big, especially in after hours trading on a Sunday evening. It's a pretty big deal here. Okay? That's a bull position, and they had 97% buy imbalance at that price, and price pushes higher. So you ask yourself 2 questions. What should happen if a big buyer enters the market? What should happen? If a big buyer enters the market, what should happen? Price should go up. Then you ask yourself, what does happen? Price did go up. So that happened like it was supposed to. Okay? Now what happens if a big seller hits the market? Okay? Here's a 41 contract sell imbalance. It sells. You ask yourself, what should happen? Well, if this is a big seller and a big sell imbalance, price should go down. What does happen? Price actually goes up. Uh-oh. After you're a seller, you become a buyer. So if they come out of their trade and price doesn't go in their favor, they have to liquidate. They have to cover their position for a loss. And that is essentially what lifts the market higher. So this is the footprint. Okay? You have the volume at price that is based on contracts that are trading at the market, bid and offer. And this is cumulative throughout the day. Okay? You also have this right here, which is cumulative for the day. There is a 1,000 contract buy imbalance right now. That's 24% greater, right, at that overall for the day so far. You also have this imbalance right here that shows you the imbalance for the entire bar. For example, this big buy right here, what should happen? Well, if a huge buy imbalance occurs on that bar, what should happen? It should go up. If it doesn't, then they are forced to liquidate. After you're a big buyer, you're a seller, and then price would go down. So you have to see what happens in the market, and the footprint helps you see that. So now that we have an understanding of the key elements of the footprint chart, what we're going to do now is we're going to tie together what's happening in a candlestick chart with what's happening in a footprint chart. We're going to look at what it looks like when price is being absorbed at current levels. If that absorption fails, you see big time movement against that position. So we're going to look at the playbook here of how it looks like in this crude oil chart. that we referenced earlier. So let's go ahead and take a look here at crude oil, and let's use a playback feature so we can actually see the market develop as the day progresses with this footprint information streaming through in our chart. So first of all, what we're going to do is we're going to grab the candlestick chart from earlier. Okay, here we are. And what we're going to do is back this thing all the way back to about 7:30. So 30 minutes before the market opens. So basically, price had chopped around here. And what we're going to do is watch the footprint. Okay? And we're going to relate how the footprint looks when price is about to break out, or when it's about to fail and go lower, or how it looks like when price reaches a high and then drops, or when it reaches a low and then rallies. So we're going to look at various scenarios here throughout the day and how price progressed, because this action is very typical of what happens in crude oil. And this type of activity can happen in any market that you're looking at. But this is a pure auction in crude oil here, and it provides a very, very good snapshot of how price can behave when these order flow rules really come into effect. You know, trapped buyers, trapped sellers, absorption, those types of things are what influence price. Not indicators, not technical analysis, not fundamental analysis. This is actual order flow that is showing orders being transacted at the present. Remember, order flow allows you to see the auction at its most accurate level. We're actually peering inside these bars to see what is really happening in there, what buy and sell orders are happening at that level. If someone comes in and buys big right here at this high and price goes against you, you know this thing is about to drop. If price comes in and is defended here with a big buyer, you know price has a good shot to go higher. You know if price is actually absorbing here and big sellers come in and can't get price to go lower, you know there's an even better shot to go higher. So that's what we're going to look at throughout this chart so that you can really see how the footprint works. So here we are. We're about to start this thing off. Okay? Let's just do a little pre-market analysis here. The market opens in 30 minutes. We've been consolidating on highs. Here we are, holding above 103, developing a tight range here. We rallied through major resistance here, which is a key level at 102.24, and we're now holding at highs, creating balance after an expansion phase. Okay? So early on, the idea is watch 103s. If price breaks that zone, we likely auction all the way back to 102.24. And if price breaks through recent highs at 103.80, we're likely headed up to some upside primary targets or prior resistance. Okay? So that's the pre-market read. Now, when we're looking at this, obviously nothing really happens until you break free from current balance. So what we're going to do right now is we're going to watch the footprint chart instead. And we're just going to watch it play out. Now I'm using the playback feature. Every 1 second that plays by in your chart right now is going to be 5 minutes of actual trading activity. So it's going to be sped up quite a bit, but we're still going to be able to see how price responds. And I'm going to pause it and talk about certain scenarios and discuss. So let's go ahead and get started. So right now, price is basically holding above VWAP, and we got a little bit of a push higher. Now let's go ahead and just pause it for a moment. I know we're already early into this game, but look what happened here. These white boxes, that's ETH VWAP. Okay, that's ETH VWAP. That's extended trading hours VWAP. Volume weighted average price. So that's the average price where buyers and sellers have come in the market. Now what you'll notice early on, and you'll see this in pre-market trading before price finds its overall direction. But what you'll see is price pushes through VWAP. Okay? And when it pushed through VWAP and reached a high right here, which is 103.29. Look what happened as it pushed through right here. That's VWAP, okay? Look at those two blocks. That's nearly 500 contracts that sold VWAP and one tick above VWAP. Those are aggressive sellers that came into the market. Aggressive sellers that said, sell right now at this price. They hit the bid. 500 contracts about come through at that price. And what happens? Does price go up or does it go down? Well, I'll give you an early clue here on when we're looking at these tick bars. But basically right here, this little stripe tells you if price closed higher or not. If it's red in the middle, it means it started here and then it closed here on that bar. If it's green from the bottom to the top, it means it opened here and it closed here. Over here, it means it opened here and it closed there. That little red stripe right there. This little green stripe right here. Okay? So when you're looking at this, you tell yourself, okay, 500 contracts just came in to sell right now at VWAP, right around this zone. And price, look at the little green stripe, goes up. Already, those are stuck aggressive sellers. Look what happened right here, 224, and look what happened right here, minus 440. 440 contracts came in at that zone. And what happened? Price ticked higher. That's an aggressive seller that is now trapped. If you just sold 440 contracts of crude oil, remember it's $10 a tick. Every tick against you is $4,400 loss. Basically at this point, right? So boom, boom, we're going higher and higher. Oh, someone comes in and another 200 contracts is sold and it goes up and up. That's telling you that there are larger passive buyers that are using limit orders, that are holding off sellers. They're basically absorbing supply. So if you look at this, these are telling you the sellers that are coming in at the market. They're hitting the bid. This is hit the bid, okay? And this is very important because these are aggressive sellers that are saying, I think the price is going down now. I need to get in right now before I miss it, okay? That's what they're saying. On the other hand, there's someone that's using a limit order, a passive buyer, and they're saying, I think price is going to go up. And what I'm going to do is I'm going to put a big limit order here. And if price comes here, I'm hoping to be filled. So maybe this seller right here was a big seller, obviously. 440 contract delta. Now these contracts, you know, it's cumulative. So we don't know if it's one seller or more, but we can filter the footprint so we can see exactly how many contracts came through, you know, at that print. So we can go further into it, but I don't really care. At this point, I like the differential here. This is a delta, and that's just all I need to know. So I make believe that that's one person, or it could be 10. It doesn't matter. Obviously, if it's one person, it's much more powerful. But if there's 440 contracts here, and just think about it from your end. If you sold 440 contracts and price goes in your favor by just one tick, you're going to want to get out of Dodge as fast as possible. And this seller, after they sell to place that order, you become a buyer. So if price is going to go against you, to cover, you must buy. And this seller single-handedly started this move. From 103.11 to 103.50. That is a 40 tick move. $400 per contract. 40 ticks. Remember, it's $10 a tick. It's $400 per contract. That's what that move is worth because one person got stuck. Because you know why? If he gets stuck or she, and you are forced to buy to cover, you start triggering everyone else's stops all the way up until the last buyer is bought, and then price comes down till the last seller has sold, right? So when you look at this, and you're seeing someone here that came in at 440 contracts to sell it, they're thinking price is going down. That's an aggressive seller that's coming in at the market. Now, there's an invisible hand there. The invisible hand is the passive buyer. Okay, someone else is taking the other side there. Someone else is taking the other side. This is a passive buyer, and passive buyers use limit orders, okay? So someone has a limit order here. We call it a resting limit order. And they have it at the same price, or just around that level, and that's 103.11. Okay? 103.11. So at 103.11, there's a passive buyer, and maybe, well, we know the passive buyers at that level are much bigger. But maybe this passive buyer has 1,000 contracts sitting there. So when this person thinks that they're a big fish coming in to sell 440, you have a passive buyer right here that's putting in 1,000 right there. So when it comes down, it fills immediately and rejects because this passive buyer had a stronger hand and was able to sweep the offers and push price higher. Because this person right here got stuck because there was a bigger passive buyer that was absorbing that supply, and then price reversed when this person right here had to cover. So that's what's happened here. And we haven't even hit the open yet. Now, I just gave you a very, very clear level of detail for just one little piece of information here, and we haven't even started RTH trading yet. This is how powerful the footprint chart can be. Now, if you look at this from another perspective here, just to get going, this is VWAP. Remember, VWAP is fair value. Price comes, and then sellers say, I'm going to sell fair value big time. And instead, price goes up. And then what happens? Price goes up and comes back to where they sold and is absorbed again. So basically what happened here, when price pushed up and then came back, there were buyers here that were absorbing these sell orders because they wanted to buy it. There was buyers here, here, and all the way up, passive buyers that were absorbing that demand. Now look at this. Look how many sellers are here. I look at the big ones. I don't care about this one or this one or this one. I don't really care about the small baby ones. I'm looking at the big numbers. Give me the big orders. Those are the big fish you want to track. There's a 369. Here's another 300. Here's 170. Here's a 50. Here's a 150. Here's a 100, a 120s. Here's a 140. That's the only buy. That's big. The rest are all selling. So look at that for a moment. All of these contracts right here, for the most part, they're all sell side. And what is price doing? Is it going up, down, or sideways? It's mostly going sideways to up. But hold on. These are a lot of sellers in here. Why isn't price going down? Because there are passive buyers that are putting limit orders in here that is basically absorbing all of that supply. They are the demand. And if price pushes up and comes back on a pullback and everything is red on the pullback, these are all sellers that are trying to sell right now. But what do passive buyers do? In a trending market, you buy the dips, right? Price pushes up, it comes back, you buy the dip with a limit order. Price pushes up, it pulls back. There's a lot of limit orders in here buying. That's why you get all these sellers and price can't go down because they are being absorbed by passive buyers. And when you have an uptrending market and the pullback is all red, all of these sellers become all of these buyers on the way up. They are the buyers that lift the market because their stops get run. That's order flow. And if you understand that concept, you know more than 99% of traders out there. That is trading. That is order flow. If you only use one tool the rest of your life to trade, it's an order flow tool like this footprint chart. And if you have this information in front of you, you do not need anything else to trade. You could literally use this and the dome and just knock it out because you're seeing buyers and sellers in the market, who's getting trapped, who's positioned where, and then you can game those positions and take the money from whoever's about to get their stops run. That's the name of the game. So let's go ahead and extend this further. All right, here we go. Price is pushing along now. Look at these sellers come in a little bit here, kind of pushing price back to 103. Oh, hold on. Here we go. Here are some sellers that came in, kind of pushing price a little lower, some more sellers, and then a big 176 comes in and price goes up. Look at the green stripe here. Price goes bid higher. But wait a minute. That was 176 contracts on the low there, or one tick off the low and price goes up. That's right. Forced to cover and price rotates higher. And then you get someone that comes in and buys. 578 contract buying balance at 103.44, and price ticks 2 ticks higher and then goes offered. But see this person right here? As long as you hold that person on a pullback, you're likely going to continue to be absorbed. So let's see what happens. All right, now as price progresses, it honors the 103.32 level. Okay, let's look at this again. Here's 103.32. The level I mentioned before was 103.30 that it needed to hold. As long as price holds above that stuck seller, price is likely going to continue higher, and we just saw the breakout. The other thing you've seen right now is something very, very important. Take a look at the chart, because if you look at this chart closely, you'll see right here, that's the biggest volume we've seen so far. 2,130 contract sell in balance. Someone sold big right here. How many ticks did it go down after they sold it? 0. Look at the volume at this price. 103.42 is where that traded. 63% of the contracts that came in at that price were sell side. There was overall for the day 1,987 contracts sell in balance. On this price, on this bar, there was a 2,130 contract sell in balance, and price goes up. That is all you need to know to buy this thing and get it going higher. Buy it right there. That's your most sure signal that you'll see. Nothing is perfect, because after this prints, 2 bars later, someone can sell 5,000 and we can go down, or someone can buy 4,000 and get stuck and price goes down. Nothing's ever perfect, but when you see this, that, and this right here, and you see this right here, all kind of the same thing, looking at the same type of information, but look at all of the selling that came in here, and look how far price did not go against or down. Instead, it just popped up. That's a stuck seller, a trapped aggressive seller that must now become a buyer and be forced to cover. And look at this. 639 to buy, 428 to buy, 914 to buy, 876.74 to buy, 163 to buy. So after this person came in and got trapped, look at all the buyers that came in to squeeze that person out of their trade. Not only that, this person became part of the reason that price pushed higher. You see it right there. This is the reason the pros use the footprint chart. This is the reason the pros use order flow. Order flow helps you identify where the market participants are positioned. It helps you identify which orders are coming through at the market. And if you track the big orders and see who is getting trapped in their position, you can squeeze. This is one of my favorites here. When big, huge sell order comes in and price pushes up, what am I looking to do? I'm looking to buy as fast as possible to squeeze them out of their trade. What's a standard stop loss in crude oil for the basic trader? 20 ticks. Look at them come out of their position here at 103.42 and boom, price pushes up about 20 ticks. It goes higher than that, but I stopped it. 20 ticks. So if you step on the gas here and you buy to squeeze them out of their trade, you got at least 20 ticks. That's $200 per contract on 20 ticks. $10 a tick. Okay, let's progress this. Now here's a big buyer that comes in and price goes offered, but then sellers come in and look at price lift up. Let's go ahead and pause this for a moment. Look at how price, first of all, you have to look at how price handled this big buyer that came in. Okay, that buyer right there, 1,730 contract buy and balance, and price goes offered. Okay, you could be looking to sell and step on their throats because they got to be forced to liquidate the trade if price goes against them, right? But price has been trending up today. So you're focused more on buying and squeezing those sellers that are coming at the wrong price. Look at this right here. 365 contracts come in to sell. 103.57s, and price again goes up. Price stopped going up when 152 buy side imbalance comes in and price can't go any higher. It's trapped buyer. Trapped buyer pushes price lower. Trapped seller pushes price higher. 331 contracts on this pullback. So right now, we're getting close to a point here. Because if you're trending higher, remember what did I tell you? If this is your uptrend, buy the dips. Well, when the dips are red, that's when you buy. So we're getting close here to a potential buy opportunity into 104, 104.20. Let's take a look. Here we go. Let's stop it right here for a moment. Price pushes up, comes back down. Look at the selling. But price was going offered after the selling. That's what should happen. More selling, price goes offered. And then 800 contracts come in to sell. 103.70. 69% of the contracts that came in at that price were sell side. 69 for the day. That tells you right there, this is a visual cue of the bears having a short position. You can see the bears having a short position. 800 contracts short, and what does price do? It takes one lower and then pushes up. They're now trapped. That means that these 800 contracts need to get unwound here on the way up, and that's going to trigger more upside. But if you see the flow that I'm talking about here, on the pullbacks, you want it to be red. And when it gets down there and you get a huge sell imbalance like this and price goes bid, they are now trapped, and you want to buy right here so that you can squeeze them out of their trade and get that move. What's a standard stop loss? 20 ticks. Here's 103.70. There's 103.90. You got it easily. I'm not saying every move is 20 ticks worth, but what I'm saying is when you understand when someone's getting trapped, the big players, that's when you get the moves. If this was just you know, 60 contracts like this was down here, it doesn't mean as much. But this is a big fish that sold the wrong price, and now they got to pay. All right, so let's keep going with the chart. Let's stop it. Here we go. Now, when you look at this again, here it is. We push to those highs. Look at all the buyers that came in here. All the buyers that came in, and price could not continue higher. Price did not go bid higher. They're now trapped, and you get a little bit of a pullback. But remember, we're in an uptrending market. Our general bias was to the upside today. And look at all of the sellers that come in here. 500, 50, and 200 more. Okay? 750 contracts come in sell side at this price. And again, what happens? You ask yourself, what should happen? Well, if big sellers come in, price should go down. What does happen? Price goes up. Uh-oh. This guy right here is toast. So is this one, so is this one, so is this one. They're all having to cover. Basically, what you're looking at is this 200, this 500, this 300. Match them. Match them. You know, they're forced to liquidate right now. Okay? They're forced to liquidate. All of these sellers become all of these buyers, and they're the ones that push the market higher. Okay? Now you have all of these sellers right here that are coming in, and price is going down a little bit. But you have to be careful, because right here, price is now being absorbed. 103.88 to 103.92. Okay? So let's watch that zone. Price pushes lower, sellers coming in, buyers defending. Okay, let's stop it here. So now price rotates lower, and here's our 88 to 92. What happens here? Look at the sellers that come in. Look at all the sellers that come in here. All of these sellers, and yet price can't go down. It's holding. All of these buyers start to come in, and they start to successfully push price, stepping on their stop orders, basically, you know, feasting on them. Because these right here, these are sellers, and their stops are here, 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 or wherever. And when price starts to go against them, some of these initial stops start to get triggered, and these sellers become these buyers. Additionally, the smart traders will come in and aggressively buy here to step on their throats. And that's what we'll be doing. So now when you come in here and you push play, again, you'll see price start to rotate higher off that zone because absorption is happening at 103.88 to 103.92. Now before we move forward, let's go ahead and drop back down into the candlestick chart and just let's look at what's transpired in the market up to this point in the day. Basically, if you're looking at this chart, here's a couple of things to keep in mind. First of all, we have the 1-day volume profile that's developing here, and we have the 5-day volume profile that's developing here. We have the developing value area of the 5-day, and you can see that price pushed up to that zone, went offered, and then held up at 103.70 and pushed through the top of value right here and has now held above value. Okay, that's the important thing. Number two, you can see that price on a 1 and 5-day basis here, you had volume point of control at 103.42. That was right here. Earlier in the day, the overnight value was down here at 103.11 or 10 or 11. So we had a VPOC shift higher. Two of them, here and then here. What happens? Price goes bid. So value follows price higher, and then when it tested here, it goes bid higher. Okay. Then we push through the top of value on a 5-day basis here and are now holding. Okay, so when you're looking at this, here's 103.88 to 103.92. That's our support zone. Look at the low volume node that's starting to develop right here. That's the low volume node. Price is starting to develop a ledge right here, a volume ledge. So you can see right there, there's a volume ledge here, and then volume completely drops off here until you get down to this point. So right here, there is zero interest to do business. That's why you see no volume. So when price shoots higher and comes back, this is the spot that gets absorbed here, right there at the top of the ledge. So this is the first chance here, here, and here. This is 103.88 to 103.92 right there being absorbed. So when you're getting that absorption, that means limit orders. Passive buyers have limit orders here, and they're making this support. So when price pushes to new highs here, or pushes to this new high and pulls back, they already have limit orders that have come in to provide support. When price comes higher and then pushes down, they have limit orders still there looking to provide support. So when you have those big sellers that came in and sold here, remember those big passive buyers, they have limit orders, resting limits sitting there. So when you have that big 440 contract sell imbalance that came in here, what happened? Price immediately went higher because passive buyers had already put their limit orders right on that support, and they're looking to buy this thing and push it higher. So right now we're seeing absorption here. That could be an iceberg order. That could be orders that are just developing here, and responsive buyers are just participating in the current uptrend. It could be so many different things. But overall, support is developing here on 103.90. As we recall from our pre-market look, what did I mention before? When we looked out, we said, hey, this thing has been trending higher, and you can see the overall advance. You can see support develop here at 103s. This is 103.80. So if we can push through 103.80 and hold, we have a shot to reach resistance at 104.40s, which is so far the high of the year. So price pushes through 103.80, and there it is. The support is happening right here. And now passive buyers are putting their limit orders here to absorb that demand. So once we push beyond resistance here, passive buyers are providing support by putting their limit orders here to buy this, buy this, buy this. You know, they're saying, hey, we have to defend here because this is a breakout zone. That's how resistance turns to support. Here's resistance. This is how resistance turns to support. You break through, and when you come back, you have limit orders ready to go. Then you push up, and you come back, and you have limit orders ready to go. And you push up, and that keeps happening until you break free from the new balance range. Overall, as long as price holds above these 103.80s, price goes higher. Once price breaks through this LVN, price likely drops back to value at 103.40. So let's go ahead and proceed. Let's look back at the footprint chart now, and let's push play. As we push play, price pushes down into 103.94 and pops higher. Okay, so right now we're continue to have absorption above 103.88 to 103.92, and price pushes higher to 104.20 and immediately is sold. Okay, so let's look at that. When you're looking at this, you see price push higher here. And then what happens at 104.20? Okay, here's 104.20 right here, right there. Price pushes higher into that zone, and you have a buy imbalance that comes in. 243 contract buy imbalance, and price goes offered immediately. What I mean by that is a buyer comes in, big buyer, and as soon as they buy 243 contract buy imbalance, price ticks lower instead. That means that there is a larger passive seller. Remember, there are passive buyers and there are passive sellers. So this is a passive seller that comes in, and that passive seller basically absorbs that demand. An aggressive buyer comes in. This is an aggressive buyer, so ag buyer, okay? That's an aggressive buyer. They come in at the market, 243 contract buy imbalance, and price goes down. That's bad for them because now this buyer becomes these sellers. And that's ultimately what pushes price lower. Now look what happened. After price rotated lower here and pushes downward, the first bounce back up brings you right back to this level right here, which is 104.14. And look at how price just stopped right on that level, time and time again. So after all of these buyers bought, count them up, 200, 265, 163, 243. Those buyers, that's about 1,000 contracts right there worth of buying. And look at the price level. Just look at it, 104.16. Okay? So if you put a divide right here, 104.16, look at all the buyers here. All of those buyers bought too high, and now when price pushes lower and then makes their entries resistance, they are forced to cover. And those buyers become sellers, and that's what pushes price lower. So when price pushes down and comes up and can't get above the zone, and then price comes down, and then when it comes up, it can't get above the zone, these are sellers here with limit orders that are making this resistance, and they're sealing these highs. Once that occurs, you likely get a rotation lower as price pushes downward. Okay? Now, when you're looking at this, what do you do with this information? Well, if price pushes up to 104.20 in crude oil, a 20 level is very important. Because we mentioned earlier, what's a standard stop? 20 ticks is a standard stop. Here's 104 right here. If someone gets in short 104s and they have a 20 tick stop, remember, you sold 104s. Okay? Say someone sold 104s, you have a 20 tick stop. When price goes 20 ticks against you, you have to buy to cover. Look at all the buys that came in at the market to cover. And then what happens? Price goes lower. Okay? That's basically how the market moves. So once you see this print right here, 104.20, and you see a big buying balance and price goes offered, and then you look at all of the buys that came in here and yet price pushed below that price and couldn't get above it, that's important information. So what you want to do is you want to sell here, or you want to sell here or here or here, right? You want to step against this trade. If they bought it here and price is going down, you need to sell it as fast as you can. Or you wait for it to come back and form a resistance ledge. The roll down. You look at these buyers that come in right here and price rotates lower. That tells you right there that there are passive sellers right now that are absorbing this demand. Just like passive sellers absorbed this demand. Okay? Now over here, this is an aggressive seller. So aggressive seller says, hey, I'm going to sell this here right now. And then all of these aggressive sellers come in and a sell program sparks off, which drops price into 103.92. So look how sharply this was rejected at 104.20. And then price comes downward and then forms resistance here and then pushes even lower. That's a quick 30 tick reversal on one person getting stuck right there. A trapped aggressive buyer got stuck, and real quickly you get a 30 tick reversal. That's $300 a contract right there. You can see how we can do this all day long. Now after price breaks through this support ledge here, what happens here? A huge buyer comes in and says, I'm going to defend 104s. And they buy, and it's a 705 contract buy and balance. And what happens? Price doesn't even blink. It keeps on going because this buyer is forced to liquidate now. That's why it's very important. An aggressive buyer coming in on a low to defend is good. A big aggressive buyer is good. But they're vulnerable. They still need other buying to come in after them to push this thing higher. That's why it's much better if it's an aggressive stuck seller at a low. Because when price pushes up, they don't need any help. They are the help that's pushing price higher. So if price gets a huge buy here and the market just goes right through it, This thing is going much, much lower because these are passive sellers. This is a sell program that is just rolling limits down as price moves lower. It's filling in the limits behind it, behind price. So every time it comes back, boom, it's getting filled, it drops lower. And all the limits are getting placed in behind it. And boom, it gets hit and drops lower. That's what's happening. So let's push this thing forward now. Remember, 103.88 to 103.92 is important support. That's where absorption's happening. Oh, look at this. Okay, let's stop it here. 103.88 to 103.92. There's our levels, right? Support. We know absorption's happening in this area. What happened here? What happened right here? 302 contract sell imbalance. 400 here. 279. There's about 300 right here. All of these sellers came in right off of our area of support. That's absorption. That means there are big passive buyers here that are defending this zone with limit orders time and time again. So all of these sellers have to unwind and push this thing higher because their stops start to get triggered. Look at what happens here. Remember that earlier 2000 contract sell imbalance? Here's another one. Someone else sold 2,000, 104.03. 53% of the contracts at that level were sell side. That was a sell side imbalance. You can see the big sell that comes in right here on that whole entire bar. And which way does price go after that sell comes in? Price goes up. That's order flow right there. You see a big sell come in and price ticks higher. You buy it because they're about to cover this position. Listen, if someone comes in with 2,000 contracts to sell crude oil, they're not holding a huge stop. You know, if that big order comes in and all that happens is price ticks one tick lower and then shoots against you, they're toast. They're getting out because that's worth a lot of money. This is a big time player, institution, bank, foreign country, a billionaire trader. You know, that's what they are. They're not going to sit here and wait around forever. So when they get stuck right here, they're getting out. So it's a very great visual representation of a bear's position. Look at this right here. This is telling you someone just got short big, okay? And if price goes up, they're going to be forced to liquidate and this thing's going up. And it's happening after all of the absorption that happened here. Seller, 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 seller. All of these sellers coming in and yet price is going up. That's absorption. That tells you that there are larger passive buyers that have limit orders here and they're absorbing that supply. They are the demand. All right, let's go ahead and push play and let's see how this thing continues to develop. Okay, so price right now still holding above the 103.88 to 103.90 LVN and is testing highs now. And as we push forward, let's pause it for a moment. You can see one thing here. After price pushes back to 103.88 to 103.92, right? That was our area of support where absorption's happening. Look at the sells that come in. Look at the sells that come in right here and look at how price rolls higher. Okay? Now, one thing to keep in mind about this is that when price comes back, because look at this buy imbalance that comes in right here. You see that one? 666 contract buy imbalance. Which way does price go? It goes offered. Remember, this is an uptrend though. But you can see right here, big buy imbalance, then a big sell imbalance right after it, and price rolls down. But remember, what did I tell you before? If we're in an uptrending market, you want the pullbacks to be very red. Because if they're very red and price isn't going lower, they're getting absorbed. And they're about to be the buyers that lift the market higher. And look at all the sell contracts that come in here. Here, 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 there, and there. And then the last one, holding the bag at 104.08. Is this 130 comes in to sell, and this is the last one that says, I'm selling right now. and then price takes their stop out above here. And now all of a sudden, all of these that got short start getting their stops taken out above this level. And then you have this level where more stops are, and what happens? Price goes up. And then look at the sell imbalance right here, 1,052, and price goes up. And when it returns, it holds that level. Why? Why does it hold that level? Because this buyer right here, because this is a seller, right? But after they sell, they're a buyer now. So when price comes back and it goes against them, if they held on to it, when price comes back to their entry, what are you doing? You're trying to get out, break even. So when it comes back to that point, you usually see the market spring higher off that level because buyers are now ready to buy there. Because they know if this person didn't get out, they are going to be counting their blessings here that when price returns, they got out, break even. Because remember, this is a seller when they enter the market, but they're a buyer here. So when price comes down, they buy to cover, and then price springs higher. So let's move forward again. Now, one thing to keep in mind about price around the 104.20 level is it can be very important to watch for reversals at this zone. But if price continues to hang around it, breaking through that level can lead to some significant movement in the direction of the break. Right now, on the high of the day, we see a 275 contract buy imbalance. And now price pushes through it and pushes higher. We're almost to the high of the day here, and there, we've just reached it. Let's go ahead and push pause here. Now you can see the original idea was that if we can get through 103.80, we're likely going to see 104.40s. Here's 104.40s. The high of the year is 448. That's the high of the year. So 104.48 is the high of the year. We knew that if price broke through 103.80s, we were likely going to see a test of the high of the year. That's what happened, okay? Now, as price pushed higher, you can see a lot of buyers started to come in here. Buyers here, and look at the buyer on the high. Look at that. That is 104.43. That's the high print. And that's 368 contracts that buy. And price goes offered. It goes down. Right here, another 200 come in. Price goes offered. Price pops up a little bit here, and then sellers pile in, and then more sellers pile in. But price isn't over yet. So if we continue to let it play out, this is what it looks like. Now keep in mind, when you're looking at this, you're going to see buyers, you're going to be sellers, and you're trying to figure out which way is price going. Let me pause it. But we know this is resistance. We know this is near the highs of the year. And we also know that big buyers are coming in here and here. Buyers are coming in here and here. These are also sellers coming in, and you know they're doing a little bit of work. But the big issue is that toward the end here, lots of buyers came in, and they did not get price to go higher. This is 368 contracts, 239, 169, 400, 476, 400. Look at these last ones come in, buy side, on the bounce and on the pullback. So you top out here, you pull back, you come up, and look at all the contracts that go buy. They're like, wow, we're going to buy, and let's get this thing higher. And instead, price rolls downward. Look at the big buyer that comes in here, and price rolls downward. Look at the buyer that comes in here, and price rolls downward. Another big buyer. When you see buyers entering the market with big orders and price continues to go offered, that tells you that the limit orders coming in behind are filling in, and there's passive sellers that are filling in behind price, and they are taking up all of that demand, and they're pushing it lower. So when you look at this, as it continues to progress, watch how price, after an inability to get buyers to push higher, look how quickly it drops. Okay, let's pause it. All of these buyers tried to get price to go higher, and it didn't. it went offered. Then all of these buyers trying to get price to go up higher, and it didn't. It went offered. And then there's a 1058 contract buyer that comes in right here, and they can't get it to go up, and it goes offered. Then you see some sell programs come in and push this thing down. Now, this whole time I've been talking about trending up and looking to buy the dips. And on the dips, you want to see sell imbalances, right? You want to see sell imbalances. All right? Because those are trap sellers that eventually become the buyers that lift price higher. In a downtrend, you want to see what on the pullbacks? These need to be buy imbalances. Those are the best form of confirmation at these pullbacks. These buy imbalances right here, that tells you buyers are eager. They're coming in. 1,000 contracts right here to buy on these two prices, basically. That's a buy imbalance, and yet price goes lower. And then when price pulls back again, look at all the buyers that come in to buy this thing, and price rolls lower. Again, buyer comes in and price rolls lower. That tells you these are sell programs. When these things are coming in like this and moving downward, every time it pushes downward, limit orders come in to fill in behind. So when price comes up, they're being absorbed. When price comes down here, when price pushes lower like this, the limit orders are coming in behind price to fill in. So when price bounces, right here, there's enough limit orders that reject price. The passive sellers, they're basically taking all of that demand and they're rolling price lower here because they are forced to liquidate their trade. These buyers become sellers on their exit, and they become the sellers that lead price lower. Okay, let's continue on. Now we're down to 103.90 now. And look at how price came up, and we had another sell side imbalance, and price rolls higher. Look at the 250 buy imbalance, sell imbalance that comes in, and price rolls higher. So let's pause it now. Okay, we know that there are buyers that are absorbing 103.88 to 103.92. Again, there's no other way to see this unless you're looking at order flow in some way, and we're using a footprint chart to see this. Okay, when you're looking at a candlestick chart, let's look at this candlestick chart right here, and let's remove all of the markings, and let's open it up a bit so that we can see a better view now. When we're looking at this chart, okay? Look at this chart. Here's support right here. When you see that, you say, okay, that's support. But when you see it with order flow and you see it with the footprint, you knew that was a bunch of sellers that couldn't get price to go down. We saw a lot of sellers here that couldn't get price to go down. We saw some sellers here that couldn't get price to go down. But we saw inside the bars. We saw the auction. When you're looking at candlesticks, you cannot see anything other than price ticked up or down. You don't know what's happening inside. You don't know how much volume is going through at those levels. You're trading blind. But when you trade with your eyes open, you're able to see those various inflection points, and you're able to see the market. You're able to see the auction live through the footprint. And that's what's powerful about using order flow in your trading. Right here, look at the 439 contract sell imbalance that comes in on 91. Okay? Now, look at the actual chart. This is the actual chart, and there's the imbalance right there. Tell me how you see the imbalance on this chart. You cannot. That's why it's important to use an order flow tool like Footprint or like the DORM or like some other order flow that allows you to see that information, because that is what's important. If you see a seller, a huge seller came in here and they couldn't get price to go down, you buy it. And that happened here and here and here as the sellers were absorbed and price rotated higher, 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 and now higher again. The difference is right up here on these highs, which are right by the highs of the year, those were absorbed significantly. Those buy imbalances were absorbed significantly by big time players. When you're absorbing that type of volume, those buy imbalances near the high of the year, those are institutions. Those are, sheiks. Those are governments. Those are so many different players that are playing that. Those are the biggest billionaires. Those are, traders like you and me. But for the most part, those passive sellers that are absorbing all that demand, they've got big money. And they are looking to keep a lid on the market at that point. And it worked. What else happened? We broke below this LVN that had formed at 104.25. Once we broke below that LVN, like we did, we broke below this lows, which held some absorption, things start to change. We still have support here, but if price can't get back above this LVN, and we go offered through 104.09, which is one-day value, that implies a test back at support, and if we go offered through the LVN, we're dropping into 103.42, which is 5-day value, which we identified earlier. So let's go ahead and look at how price continues to develop in the footprint chart. Let's push play. And you can see here that 104.16 price pushes up and there's sell imbalances. Here's a 561 sell imbalance that hits 104.12. Price goes offered. And now we are holding just above the 103.90 area of support. Now keep in mind, look at this. Let's pause it. Here's 103.88. Here's 103.92. That's the zone of support where all of the sell imbalances were dropping into that area, and those sell imbalances were being absorbed by passive buyers, and price was rotating higher. What happened this time around? Here's 103.92. What happened this time around? What happened this time around right here? What happened here? Look at all those buyers come in to defend this area. Those are aggressive buyers that say, I'm going to defend here because I've seen it go up and up and up all day. Well, look at all of those buyers come in, and they can't get price to go up. It stays. And then you see big seller here, a big seller here, and a big seller here, and price, is starting to be evened out. Look at right here. Big buy imbalance, and price rotates lower. Price comes back, and now we have lower highs. Very, very short-term stuff. But look at what happened at that 103.92. All of a sudden, all of the sell imbalances that we were buying because we were stepping on them to reach their stops, now these buy imbalances are coming in to defend. And what did I tell you about buy imbalances on the lows? Watch out, because if price doesn't go up, all of these buyers become all of these sellers, which influences price lower. And we finally broke through the 103.88 zone of support. We're getting into the LVN, and if price can't get back above that zone, we're likely headed down to 103.42. So let's go ahead and push play and see how the trade develops. Here we go. Price pushes lower. Look at all the buy imbalances that come in, and yet price isn't able to do anything but go down. Okay, so if I stop it here, look at all of these buyers that come in. Big time buys. And look at what what the level is, 103.80. 1,300, 460, 1950. All of these make about 1,000. So you're looking at this and you're thinking, wow, all of these buyers came in and yet price did not go up. That's absorption. That means passive sellers are still holding the market down and price rotates lower. Look at all of these buyers that come in. 479, 685, 400, 1800, 2800. Tell me how far price moved higher after those buyers came in. Price did not move higher after those buyers came in. So these buyers become these sellers. So let's watch it progress. So now we see price continues to push over into 103.60 and is now holding below a bunch of sell imbalances that came in here All of these buying balances weren't able to influence price higher. That's on 68. And just like what we said earlier, watch the 68s right here. Let me get back on track. So if you watch this, let's pause it now. Here's the 103.68. What did I mention before? Look how big that buy is right there. 80%, 81.3% of the contracts that came in on that price throughout the day, 103.68, were buy side. 80% of the contracts that came in at that price throughout the day, cumulatively, were buy side. Okay? So if you look at that price now, right here at 68, it's right here. 2,800, 600, those are buyers. So now that shows you a visual representation right there on the screen that there's a buyer right there, or a collection of buyers, or whatever the case may be, and that is their position. They're long from here. Price tried to battle higher, but they're long from here, and price is below that level for the most part. Makes it resistance here. They are forced to cover, and look at the sell-off. 103.68, 103.32. That is a pretty decent spread there, about 40 points, 40 ticks rather. That's $400 per contract because they could not get price higher. These buyers could not get price higher. These buyers become these sellers as price goes downward. And that's how price moves. That's order flow. So now if we continue on in the chart here, we've already dropped down to 103.32. We've already gotten down to 103.42, which was our VPOC. That's our 5-day VPOC, and we got there. So it's been a 1-point drop ever since we saw the high at 104.42. Remember, 104.42, where we got all of the absorption, that was right here. All of the buying balances that came in there were stifled. Price broke back below these 104.30s and then pushed lower. When price tried to get up, the buying balances couldn't push price higher, and then we saw price roll lower. That is a 1-point drop. 1-point drop. And how long? Oh, 2 hours or so. I mean, it was just a quick roll down here. And it has been fantastic because price continues to honor these basic rules because it is the market. Look at the chart right here and look at the buying balances that come in. Look at all of those buying balances that come in here. How far higher did they push price? Nil. So they have to get their stops run. They are forced to cover their position, and that's what influences price lower. Look at this right here. Look at all the buying balances that come in here. And look at price go lower. That's what order flow is all about. Using order flow to identify where traders are positioned. Where are they getting into the trade? Where are they trapped? How can I benefit from this information? How can I see that there are buyers that heavily bought 68s and now price is below 68s and they're about to get their stops run, so I get short? That is what order flow is. That is the footprint. So that's basically the entire day for this session. And you can see how many countless opportunities there were in this one session using the footprint chart. If we're looking at price, and we're looking at this 1,000-bar chart of crude oil futures, and we see how price pushed through the top of 5-day value here, which was our 103.80 key breakout level. We saw how price absorbed on this zone. We saw how price pushed higher, and ultimately we saw how price was unable to push beyond the 104.40s and was instead absorbed by passive sellers. Look at the drop that occurred after that. This is the power of the footprint. This is the power of order flow analysis. And what we're going to do is continue to identify how to find those trapped buyers and sellers, how to identify when the big players are passively buying or selling so that we can bid with the bidders, we can offer with the offerers, and we can squeeze those traders that are wrong out of their positions. That's the goal. And when you can use order flow in your trading, you basically have the most accurate real-time analysis that you can have in the market. It is the most advanced way to trade is by using this information. So if you're using these bar charts here and you're identifying, hey, this is normally my area to buy. Maybe we're trending higher and you like to use pullbacks at moving averages. Maybe you like to buy support. Well, now you can confirm your entries with order flow. Or you can use order flow only to trigger these entries. But if you see a setup that jives with how you usually like to buy or sell price, watch the order flow. Are there trapped buyers and sellers there? If so, are they influencing price? Are they not? How's it happening? Because if aggressive buyers are hitting the footprint and price is not being influenced, that is a fade opportunity. So we're going to continue to progress in our footprint knowledge. And as we move forward, we're going to get an in-depth knowledge of how to really see the market's auction with this analysis. We are going to be able to identify the most amazing reversal opportunities the market has to offer. It's not always perfect because order flow analysis is showing you what's happening now. And in every millisecond, there are new orders that hit the market. So it's not perfect, but it is the most accurate way to view the market. So when we're using auction market theory and we're using our volume profile and now we're using the footprint chart, this is when true magic happens in the market for traders, because you are seeing the market as it is intended to be seen through the auction lens and then also through order flow so that you can see which orders are coming into the market so that you can either ride their coattails or squeeze them out of their position. So that does it for the introduction to the footprint for the core execution module for Pivot Boss Masters.